that's where the entity called sales and trading comes into picture. So what happens is, let's say if you are a technology analyst, and let's assume that you used to cover Microsoft, okay, and for that you've given a buy recommendation. Now that you are in discussion with one of the mutual funds, and this mutual fund actually got excited with your story about how and why Microsoft is a buy. Now with this mutual fund would be excited to actually buy this stock. Maybe one reason is that the things or the elements which you have looked at in terms of research were overlooked by other research houses, and now mutual fund is kind of convinced that this is a strong buy. So what they will do is essentially they want to own this stock now. So they will ultimately, let's say, give a possibility of buying Microsoft shares to an extent of $10 million. So how will these trades get executed? So this mutual fund, do you think that they will go into the open market and find the sellers of Microsoft? No, they will not do that. They will actually approach the same investment bank to execute the trade for them. So the execution responsibility again lies with the brokerage firm, but research guys are not capable or are not made for executing the trade. So that's where the entity called sales and trading comes into picture. So here sales and trading department, which we will again discuss this in a bit more detail later, but for the time being, assume that let's say there's a $10 million that needs to be bought for this mutual fund. It will be done through this sales and trading department, and on this basically the brokerage house or the investment bank will charge commissions. So let's assume 1%, 2%, etc. Now this is how the research guys are actually making money for the investment bank, and why probably the sales and trading guys are needed to execute this, we'll discuss that in our next video tutorial.